why rupee has hit the newest low in front of us.
Focusing on the rupee and the fresh record low we've seen today, slipping to 89.78 against the US dollar, breaking its previous low now.
Why our currency is weak in front of other major currencies, be it euro, yen or even the dollar. What is the real story behind it and why the rupee keeps falling in actual terms. The rupee has weakened almost across against every other currency. But here's the truth. This is not temporary, this is not speculative, this is real and the data are telling this story. Hello everyone, welcome to Vajram and Ravi's Flash News. My name is Shubhangi Singh and today we are going to understand the fall of Indian rupee in the real terms. What does it mean? What are the things that it is facilitating and what are the things that are going wrong? So starting with understanding that what do we mean by that the fall of rupee is real and how can we understand what the terms, let's start with that. So as of now we are seeing the depreciation of rupee and this depreciation is broad based against major currencies. If we talk about the term, the concept depreciation in itself, when we are talking about exchange rate, when the value of one currency goes down as compared to the other currency, it is known as depreciation. For example, let's just say $1 was equivalent to 85 rupees and if this becomes $1 is given against 89 rupees, that means the value of rupees is falling in terms of dollar and that is depreciation. So as of now we are seeing a broad based depreciation of Indian rupee, not just against US dollar but against the major currencies which are in front of us. For example, if we talk about US dollar, you will see that one US dollar is almost 89.43 and this is the new low that rupee has touched, and similar numbers you can see across other major currencies as well. So this clearly highlights that as of now there is a whole systematic weakening that is happening. It is not against a specific currency or a specific country that rupee is seeing a fall. Rupee is falling against all the major currencies in front of us, and in some scenarios it has been highest ever since. For example, for euro we see plus 16%, for pound it is plus 11%. And that means there is an indication for the economy that we need to understand. Now, when we are talking about this understanding, we will be starting with understanding of two concepts here as well, which will give us a clearer insight. The first concept in front of us is NEER, that is nominal effective exchange rate, which shows us the depreciation in the real and the most raw form. How does it show depreciation? So when we are talking about the rupee's value in terms of other currencies when we see it through exchange rate. But when we are talking about nominal effective exchange rate, here we get a weighted average of rupees nominal exchange rates against 40 major currencies and trading partners, and that is based as the base year has been taken 2015 and 16. So here the weighted average is understood for rupee against 40 major currencies, which gives us a more honest and real picture as compared to the just exchange rate. And if we talk about the recent trend that has been seen, especially about nominal effective exchange rate, it was very stable around 90 to 94 until Jan 2025, and there has been a sharp fall that has been seen in past few months, and this is indicating that there is weakening at the rupee's end. Now why we are talking about NEER? Because whenever NEER is less than 100, it shows that rupee is weaker compared to 2015-16, and NEER is the index that we use to understand the broad external value of rupee that exists, not just against only US dollar. But NEER is the not only factor that we need to take in consideration. There is another factor that we should know about, that is REER, that is real effective exchange rate. Now when we talk about real effective exchange rate, it is nothing but NEER, but once it is adjusted with inflation. So when we are talking about REER, you can easily understand it as nominal effective exchange rate adjusted after accounting inflation. Now this will give us a further clear picture once the nominal effective exchange rate is adjusted for the inflation differences that exist not just in India but India and the trading partners. Now this brings in another dimension here, because if we talk about real effective exchange rate, we saw the peak in November 2024, that is last year, but this is where rupee's value was over the top, it was overvalued. But after a year, last month itself, we saw the value of real effective exchange rate around 97.47. That means at this point of time, rupee is being undervalued, and the reason for this sharp fall is two. First, we saw nominal depreciation. When we are talking about nominal effective exchange rate, that has shown a clear fall, which is affecting the real effective exchange rate as well. And because, as I said, real effective exchange rate is nothing but nominal effective exchange rate adjusted for inflation of India and trading partners. In this scenario, India's inflation has been lying low, somewhere around 0.25%. However, the other trading partners have inflation in the range of 2 to 4%. So here another factor comes in, and which helps us to understand. If you see this given graph, you will find that this line is indicating NEER and this is real effective exchange rate REER. There has been a direct question in prelims also about this very concept, very fundamental from the perspective of your exam also. So if you see this very sharp fall in real effective exchange rate, it is directly facilitated by the sharp fall that you see in the nominal effective exchange rate. So the nominal depreciation is driving the real depreciation that we see in front of us, and the fall that we see in rupee, the depreciation that we talk about, it is not because of speculation, it is not temporary or because of movement of another currency. As of now, this fall is real, it is genuine, and it is not also masked by inflation, because inflation stands at a low point as of now. Now, I hope the picture is clear in front of you why we are saying again and again the fall of rupee is real. Now moving to understand, once we have understood that what exactly is happening, now moving to understand that why this weakening is happening, what are the trigger factors behind it. So the first and the major trigger factor is the RBI policy shift itself. RBI policy shift has been from the stabilized exchange rate regime to crawl-like exchange rate regime. So when we talk about crawl-like exchange rate regime, you have to understand in this particular arrangement, the currency moves very gradually and there is a fixed small band within which the movement can take place. At the same time, the intervention of the central bank, in our case that is RBI, that also becomes less frequent. So IMF has reclassified India's exchange rate in this very month, in the last very month, and this reclassification has been the crawl-like arrangement that we see. And this has been further explained by the RBI Governor Sanjay Malhotra that this facilitate, we have to intervene only to prevent any excess volatility that exists. Otherwise, the currency will be moving in the small band. We will not have to work extra to defend a specific level. And it also helps rupee to align with the fundamentals of the market that exist. And the reason that this is happening at this point of time, because multiple factors are allowing the crawl-like arrangement to work. The first one being itself that the inflation is low. If the inflation is not hitting rupee directly, that means it is already in not an excessively volatile situation. Furthermore, the export competitiveness is required. Whenever rupee depreciation takes place, export competitiveness increases. How? Let me explain that with a very simple example. As I said, if we get to see $1 is equal to 50 rupees, correct? Let's just say 1 kilo sugar is for 50 rupees, but rupee depreciates and $1 becomes of 80 rupees. Now you will be able to get almost double the amount of sugar, because sugar is 50 rupees per kg but in single dollar. So that means people who are buying in dollar, that they will be able to buy more and they will find Indian goods cheaper. So export competitiveness also is facilitated and it needed support. That is why it was easier to bring in and it is easier to facilitate the crawl-like arrangement. And the best facilitation was given by the strong foreign exchange reserves that we hold as of now, which provided a huge buffer in case this does not work or in case it does not stay in the small band even after this particular arrangement. Can you tell me in the comment section what is the status of our foreign exchange reserves as of now? Now, this was not the only reason. There are other reasons as well. For example, the global pull. As of now, there are higher global rates which are available, and that is why there has been a lot of capital outflow that has been seen. If the capital outflow is happening, that means the demand for rupee is falling. That is also responsible for the depreciation. Other than that, there is a huge amount of import pressure on India. We are importing more, be it for electronics, be it for crude oil, and all of these is increasing pressure on rupee. This is very much related to the China export surge as well, because the cheap Chinese exports, they are increasing the competition, and that is why rupee is also facing problems there. And comes the investment volatility that we are seeing. In the times where we are seeing wars, not just in physical terms of physical wars, but also trade wars, the investors are not very sure where to invest. They either prefer safe haven or heavy metals, be it gold, be it silver, and there are quick outflows from the places they cannot get a guarantee. For example, if you talk about India, US announced the tariff, then US waved away the sanction that we had on the Chabar port. So this unsurety does not work in the investment market, and that is why all of these factors combined have been pulling down the rupee. But as the situation as of now, what we are looking, there are certain pros and cons to it. Now let us try to understand that. So first, looking at the prospects. If we talk about the prospects, we get to see the fall in rupee will directly facilitate our export competitiveness. Whenever the real effective exchange rate goes below 100, it is the mark that Indian goods are cheaper abroad. I have just explained that how depreciation facilitates in making Indian goods cheaper abroad. Now, if the exports increase, this will facilitate domestic manufacturing. Because we have to understand in this very situation, first, exports would require more production, that will help the domestic manufacturing. Second, when we are talking about our effective exchange rate, real effective exchange rate and nominal effective exchange rate, all of them depreciating, in this scenario, imports will also get costly. So people would want to buy from outside. That means we would want to cut down on imports, and again the emphasis would be on domestic market. So we will also get to see that there will be boost to domestic manufacturing, there will be healthy correction after years of evaluation in terms of exchange rate, and also the low inflation that is existing in our economy will give us a macroeconomic cushion. And all in all, with time we will find better alignment with market fundamentals, which will be very important to keep the investors with us for the long term. But at the same time, it does not mean that everything seems going right, because there is a side of consequences as well, because with effective exchange rates increasing, so does the import bill, be it the crude oil, gold, electronics, all of this will be costlier. There could be a possibility of rise in inflation in coming time, because when we are talking about imports at a costlier price, that will bring in the imported inflation as well, and if this depreciation continues, this risk becomes very real. Other than that, when we are talking about corporate foreign borrowing, external commercial borrowings, these will be more expensive. Why they will become more expensive? Because we will have the heavier repayment burden. How? In the same very concept, $1 is equal to 50 rupees. Now you got the commercial loan at this particular price. Now $1 has become 80 rupees. You have to pay back more. So the burden of repayment increases. It will also affect our balance of payment. There will be high consequences on travelers, tourism, students who are going abroad, and it is also going to risk the investors and the investor sentiments towards India, where we can see potential FPI outflows because of the strong dollar cycle that is in front of them. If they are seeing another, this is very basic, if one currency is weakening and another one is strengthening, investor would always want to be on the stronger side. Now that we have understood both pros and cons, we will be moving towards to understand that what exactly this means for our whole of the economy. For short term, we might be seeing imports which are costlier, fuel prices might be volatile, current account deficit might be widening, and volatility in all the markets might be possible. But the benefit of this real adjustment of rupee that is taking place is the fact that this competitive rupee will actually help domestic manufacturing, and export sector will be the ones which will see the maximum benefit of it, be it engineering goods, be it pharma, be it IT, and this will be a major support to make India a better market determined currency which it has of its own, and it will also encourage India's integration, especially into global value chains. So when we talk about the depreciation, the real fall of rupee, you have to understand that this is not an extreme crisis the way it is being talked about. It is a structural correction which was very much needed, because when rupee is depreciating in real terms, it is not just at the nominal factor, inflation had been adjusted. It is because of the multiple reasons that I have explained, and it simply indicates that rupee was previously overvalued and now it is adjusting to fundamentals which will give us benefits in the long term. So this fall of rupee in one way is healthy and a market aligned correction which was much needed, but India must manage all the other factors wisely. So this thing that has happened works better on prospects and lesser on the consequences. That was all from my side. What are your thoughts upon it? Let me know in the comment section. That was all. Thank you so much.